Hey guys, and welcome to another video. This is episode 8 of our game plan series. Now, it's been an interesting day and an interesting week. I think this week has been, something that should have been expected by now. If you didn't expect what happened this week, stay tuned and we're going to find out. And let's get started in this video. Okay, so welcome to another video, guys. And as always, first of all, I thank you guys for all the comments and the likes on the videos. I apologize that I couldn't do the live yesterday because I've been extremely busy. Even today I've been quite busy, but I'm just trying to make sure that I give you guys everything you need to get going and always be in the right position and the right side of the market. So without wasting any time, I wanted to go straight over to the dollar index. Now, this week has been pretty interesting, and you can see that I have multiple lines all stretched out across the side here. So my thing is really to go through exactly, what price action we've had. Now, if I was to put this into perspective here anyway, the dollar index, we've had the price return here, as you know. We had the second attempt here, third one close to this order block before the price took off. Now, when we got over here, it was pretty interesting because on Tuesday, we had this reaction at the high where the price came above the high of the previous week, triggered sell stops beneath here, sell liquidity in the market, liquidated positions to pull back on. Then we see that the price actually closed higher. We had these 4 H4 bodies, or 3. Let's just call it 3. I'll ignore this third one for a minute, fourth one. But these 3 right here, if I zoom in, might mess up my drawing, guys, but it's just really for sake of watching out what we're doing. So we had this here, the body of the candle just about closed at the high of this previous week high, and then we had this candle and this candle, and of course this one, even though we're going to ignore this fourth one, right? So with the price action that we had anyway, okay, the market put us in a position where I actually expected a continuation to happen. Okay, but what the market was actually doing was actually just creating sell stop liquidity, then stopping it out, creating sell stop liquidity, stopping out people's stop losses and running the price down. And what we actually did have is that in this position here, at this highest high, all right, we saw that price took a downturn and actually closed back beneath the low, the high point right at this high, and closed somewhere in the upper end of this candle here. So when the price pulled back here, what we actually found is that this supply order block became activated as a point where price could use this to go for a continuation short. Right, if we trace supply liquidity, price has pulled back down even further. Now, I'm not surprised by this movement whatsoever because there was a necessary pullback that was always going to happen. Now, the timing of it is important. Now, everything I give you guys when I'm teaching is for the necessity of making sure that you have everything to your advantage when it comes to price action. All right, now, last week we looked at the futures market. And one of the reasons, apart from, of course, smart money, intelligent money, moving money around, is that whenever we get into the beginning or an end of a month, as I said, literally last week, all right, a lot of futures contracts, not all, but some futures contracts, a big part of the futures market goes on a monthly cycle. So at the beginning of a new month, a new futures contract is created. At the end of a month, a futures contract is ending. So when future contracts get dissolved, if you want to put it this way, a lot of currency and not just the dollar, but different currencies get liquidated. As a result, positions get liquidated or they get filled. For example, as we looked at the example of a farmer who, let's say, if they had a futures contract for 1 month that I want 100 tons of raw cocoa at $300 a kilogram. At the end of the month, payment needs to be had for the futures contract to be resolved. Someone needs to receive cocoa and someone needs to receive money. So those transactional situations do have an effect on the Forex market. And as a result of that, that's why, around the end of the month, we saw this kind of hyper volatility, which is kind of calmed down now a little bit as we've got into Friday. So now that the price has done this, the first question would be, for those of you who maybe experienced the bad side to the market and kind of massive reversals on the Forex pairs, your question might be, well, does this mean we have a bearish signal? Not necessarily, because the price is still very much within range to continue going for a short. If I was to go and I'll do it from this angle here, Or if I go from the last swing that we've had now, of course, I'm going to talk about this order block on the H4 here because we talked about it last time. And just as a preface, I still think the price needs to return into this order block here. All right, so we may actually have a little bit more bearish pressure come in. But if I just go from the last swings that we've had here, I'm going to start from this month right here, the bottom of the month of May, and then I'm going to take it all the way up to here for these 2 weeks. So I wouldn't say it's the month of May, but just the bottom of the last week, I'd say. All right, not the month of May. So if we take it from this short range right here, then price has really just come back to the optimal trade entry. We've had some induction over here, and then price has made its way towards the long. Now we've broken cleanly above the equilibrium price. So in terms of in the buying and versus selling environment, the price is in premium pricing when it comes to buying. So optimal entries have gone in terms of buying in this market. But for selling, the other side of the story, if I was to take it the other way around, we are still in premium pricing. So what does that mean? Well, the trend is clearly bullish. We've had a strong reversal. We've broken above key supply and demand areas. In terms of on the selling side, the price is actually at equilibrium. So we're just about to start stepping into, in this market, areas where intelligent money, okay, institutional money, smart institutional money anyway, will have better discount prices to maybe sell the dollar off, which is not what they want to do from the larger scale time frame that we've looked at, or time frames. But just looking at it from the H4 structure, the price is at an equilibrium right now. It's touched there right now, but it hasn't broken past. The next available order block, if I was to stretch this to the left a bit, all right, and I'll take off these lines for now because we don't really need them. Then you'll see that in terms of order block here, the price, the next order block available will be within the OTE to 78.9 area. Now, if you don't know what these levels are, this is the institutional version of the Fibonacci. Please watch the four-part series of the playlist called Institutional Price Action Trading, okay, for you to have a deeper understanding. All right. I've had some comments from you guys that if I can concise the information a little bit more. So I'm going to do that. I'm going to make sure that I leave the teaching to the teaching videos and I leave the analysis to the analysis videos. So looking at the price action anyway, we are at equilibrium and we still have another 4 hours, let's just say, until the market's really done at that point. If this H4 candle does close above the equilibrium point with the body of the candle, then we should be looking for discount prices. When we get here, this is where we're going to have to be watchful for to see how price is going to maneuver. Because at the moment, as it stands, the price action we've had here has triggered a reversal that can produce a short. So what we could actually have is price may give us a long maybe until optimal trade entry on this side. And we actually could have a short. Now, this is not a short to say that we're going to be short forever, but I just want to give you guys an image into what I'm looking at in terms of price action. All right. Now, remember when the price was taken off for a long, and I have to take off the period separators for you to see this. Notice this low over here. If I just take off the red area, you see that there's a H4 order block here. Price broke above this area pretty strongly. We had a return here, but price didn't return into this H4 area right here. So right over here, we have unfulfilled efficiency of this order block right here. So if I was to put this over here and I write this out, so we have a demand order block. All right. So the demand order block here is right here. And let's put that back. Do this. All right, let's go back to the H4. Put the period separators on. So this is the H4 order block, right? Now, after that point, we have the unfulfilled efficiency here. So price failed to return to demand. So really, and let me put this here. So really, when it comes to the price action that we've had, the market has been operating in unfulfilled efficiency from the H4 standpoint anyway, from 102 until now. Now, with that being said, if the price gets into this area of optimal liquidity, we could have one more, I don't want to call it a major sell-off, but a noticeable pullback on the dollar strength, okay? And all the price will be doing will be targeting here. Now, what's powerful about this potential pullback here on the price is that right over here at this low is also the low of last week. Okay, so this is a key low or a very important low in terms of the structure of price. So we could actually see price actually return back over here and take the low of last week. And in taking the low of last week, that can be a very great or fantastic trigger to position us for a long. And there is a part of me that does believe that this can happen. Now, at the moment, where is price operating from for this long? At the moment, it's operating from this H4 order block here. All right, can just lay this out. The prices use this H4 order block for demand liquidity to continue going long. But what this does make me think is that structurally speaking, when the price closed beneath this low, we actually haven't had a break of market structure. So I'm not saying I'm bearish on the dollar like we're going to go back to $100, but I do get the bearish sense of the dollar. Even though right now markets are pulling back, we've had like Forex pairs pull back. You know, if I go to pound USD, prices return to this area where the first notable sell happened and prices coming all the way back. But I get the sense that price is going to pull back to maybe give us that last push along, possibly, right? So coming back over here to the order block here, I would say that we need to watch here now. Of course, the important part to look at when we're coming to this area here is that if price closes above this H4 high right here, which is the high of this week, with the H4 body of the candle, then there'll be no need to look for any continuation short down here. Now, unfulfilled efficiencies, as much as they can get filled, sometimes in the market when there's a certain theme that the markets are trying to move to, some of these things can get overlooked temporarily, and sometimes depending on the time frame for a long time. Okay, now the H4 I'll say is the medium time frame between lower time frames and higher time frames. Is literally for me slap bang in the middle in a sense. That will be the second kind of situation to go on. But because of the break of market structure and the amount of liquidity that we've seen come out, even though the price is in this H4 order block right now and it's pushing back long, I don't completely buy it yet. I'll only buy it if the price closes above this high. If we do have a H4 close above the high and a clean one too, like for a large candle where the price closes, at least the high is at the midpoint of that candle. So to explain what I mean, if I just use a visible demonstration here. So imagine this is my H4 makeshift H4 candle. We want the price to be at that midpoint, closing above the high. If that happens, then that would be okay for us to continue for going for a long. Okay, but I'm still eyeing up this unfulfilled efficiency, and I'm glad it's on record that you've heard me say this, that when the price didn't return here, I was hoping that, you know, the last pullback trade that we talked about, I was hoping the price will fill that out. Now, there is another side to the market, which I call market landmines, all right? And market landmines are where sometimes certain order blocks that are important are, I will say, non-accidentally overlooked for a period of time to kind of build a very good aggregate in the correct direction. So right now, you should be long on the dollar. Since I gave you the first shout for the long, which was the 26th of April, we've been in a long for a while. We've gone from $100 to 104. However, this H4 order block with the unfulfilled efficiency, this is actually a key H4 order block. Why? Because this is the last one left before the price broke above. Very important, and I'll put this here on the D1 quickly. This supply zone or our price cap, right? That's the key area. So this is the last demand zone area here. Price broke above, strong burst of liquidity return here, but we haven't had a return to demand. However, price has still been going for a long. So in my years of experience, whenever the price does something like this, I call it a landmine, which means this is one of those situations where the market could pull up here, start to descend short, maybe not apparently heavily short yet, and then start to rage for a short. And it kind of becomes a situation, oh my God, the price is just reversing. I don't know where it's trying to go, and etc. and etc. And it's just like, oh man, why did the market have to do that to me, man? Kind of situation. And then you'll be wondering, okay, where's the price going to get to? Well, in this case, it would be this low right here. That would be a key area to go for. Why beneath this low? Because if we look to the left here, we have many lows over here that would have, now these lows will be, of course, defended, or price has been trying to defend any price going, you know, below these areas, because the open interest for buying, which will come from institutional money and that realm of money, would need to defend these lows to continue price going low. So there'll be a lot of liquidity here, counterparty liquidity here, to make sure that these lows are defending. Okay, So far, the price has only managed to get to the low of one of these, but there are multiple at the beginning of this week. All right. And there is no demand zone, return over here. So my thing is that there's many lows that the price could actually grab liquidity from on the sell side, which will represent stop losses and sell stops that the market could come for and use that to power liquidity to continue going long. Because remember, trends need a boost. Trends don't just go in one direction forever. For them to continue trending, there needs to be the ebbs and flows. And those ebbs or the retracements, for that to happen, will need to be based on stop losses being run and also buy stops and sell stops being triggered. Okay. So anybody that's looking for a buy would be covering their, or anybody that's taken a buy in this market will be covering their buy with a sell by putting their stop losses beneath it and also putting sell stops if the market goes the other way. All right. So for me, this major market structure break here to me suggests that there is an opportunity for the price to actually pull back. And I'll be looking to see what the price is going to do from that. So now that we've got all of this kind of in play, let's take a look at other pairs and see where we are. Now, our main pairs that we are looking at though, and I'm going to put this here. The main pairs we're looking at are major pairs. And this time what I'm going to do a little bit differently. I'm going to go through our major pairs succinctly and just have a look to see where we can map this paradigm of the potential pullback. So if I pull this H4 area here, we've got pound USD, we've got USD CHF. Now, obviously, with USD CHF, I would advise that everybody that got into the entry, which should be in the 88 region, please don't close because we're far from anywhere towards a pullback. It'll be very difficult for the price to pull back, 200 pips. And even with that being said, the liquidity that is driving the price here is a lot stronger than the pullback that could happen, right? So you don't need to close. That's good. I hope that's good news for you. All right, but let's just take it one by one. I'll start from AD/USD. Now, I did notice this week that the Australian dollar, in the fallout, if you want to call it that, the pullbacks we've had from the NFPs, you can see Euro USD is pushing down a bit further short. We've got pound USD pushing short. We've got NZD USD pushing down for a short. The AUD and the NZD pairs seem to be, especially the AUD USD pair, seems to be holding up pretty well, all right, compared to others. The pullback hasn't been as grand. Another major one is USD CHF, which, okay, is pulled down quite a bit, probably has a lot more to go. All right, so I'm going to start from top to bottom. Let's just go from AUD USD first and have a look. Now, in terms of structurally speaking, we definitely are still bearish for the shorter term of this larger term scale price action schematic that we're on. I'll close this for a minute. So starting off with AUD USD over here, all right, when the lockdown situation happened, we fulfilled the unfulfilled deficiency that was left for 12 years, right? This unfulfilled deficiency of this low here, price return into this demand order block. For me, right now with AUD USD, because we had a failure of the price to make new highs, so let's just go over here to explain what I mean. Why I'm bearish on AUD USD for the short to mid-term as the dollar gains strength. Aside from the fundamentals that I've discussed repeatedly of the dollar index shooting through the roof because of quantitative tapering and the dollar's attempt to re-strengthen itself artificially, I expect that across major currency pairs or foreign currency, the prices of stuff like AUD USD, anywhere where the US dollar is the core currency, should be going short for the next couple of months. So after this lockdown here, let's trace liquidity here. So this is the major order block that we're dealing with here. So I'm just going to put this here, monthly demand order block. All right, so this monthly demand order block here, we had a fulfillment of efficiency here. Now notice what has happened. Now this order block that we've entered into, all right, the key is what derives after this is what was going to be important for us to ascertain to how much liquidity is in this order block and also market intention. So this was the high we had post-COVID, right? 2017, we have a high here at 81,798. Let's just call it 81,800. When price wicked into here, we had the obvious reversal. We had quite a good move in two legs. First bullish run here, all blue candles, or maybe for you, all green. Slight pullback and then a continuation. And when we get towards this supply zone over here, all right, this supply order block over here, you can see that price is struggling a bit. And then we have that failure for the price to make a higher high, which is something that would have confirmed a bullish intention. So as a result, the price has been narrowing down. And even with this order block that price has gone into again, if we trace liquidity again, this order block over here, when price did decide to go for a long, the major swing high that we had from this order block ended here. The price failed to go to any of these higher ones to break structure. Now you say, okay, but what about this one? Well, even with this one, we didn't have a body close above this swing high, so we have no structure break. So the price therefore is still bearish, right? Now, what does that mean then? That means that the targets I have for the short to midterm for ADUSD would be even below this order block. Now you'll say, okay, where, Michael, would the target be? Thank you for asking. I'm going to tell you. So right down here, probably difficult to see, but there are equal lows right over here. So at the low, and you can go and check this with TradingView, for example, at the low of at the beginning of the 2002 year. So this is the aftermath of the 9/11 crisis. What we have over here is that we have clean lows, equal lows here. So a liquidity pool beneath this area here at 50. So now you really suggesting that? Yeah, I am. Price doesn't lie. Price action never lies. I do think that a situation is coming into the world because of inflation, which we're already deeply in right now, which I wouldn't say with the body of the candle. I think it'll be more of a wick situation, but I can see the price really coming back down, maybe to this order block with the body coming beneath this low, but we could end up having a wick here. And this is on record. So I do believe it does happen, and it will happen, we can refer to this video however long it takes to happen. But I do expect the price to get to this 50 mark and get to this order block down here, because there is still an order block here, which is from 2001. All right. And if by price doing that, that will be a very deep panic where everybody will be looking to sell. And as you know, with markets, when the market is in deep panic, that bottom where panic happens is where the best buying opportunity in the world always. COVID-19 taught us that in March, if you bought any crypto at all, even if the crypto had a name that was just absolutely silly, you would have made something from it substantial, because that was the height of panic. Everybody was selling, right? So from that point, then I do expect this long-term bullish structure that I see in the Australian dollar to proceed, right? As inflation goes back down to deflation, the dollar starts to lose massive strength and people look to assets like gold, then the price should rally and the dollar will lose strength. Okay, but before that moment happens, I do expect a very big move to happen here. This is why I'm short on the Australian dollar, US dollar long for the short midterm. Now, everybody's long, short, and midterm is relative. But I'll say for me, midterm means like the next 6 months. All right. The next 6 months to a year. Long term for me is like 5 years and I'll say 2 years and above. Okay. So now that you understand this with ADUSD, okay, and I'm going to just drag this to the right. I'm trying to get space on the charts. What I'll do, bearing that in mind, my idea, and this is how you frame your price action, is that you want to be looking for where price can produce for us a entry to go for continuation short. Now, for me, the Australian dollar versus US dollar is, I wouldn't say it's be doing anything tricky, but it's just good suspicion. Now, we've spoken about this area here, which was where we had price in demand. We had a big accumulation within this area. And then finally, which is the trades you saw me take, the price broke beneath and we had this first move. Price arrived at this algorithmic level here. And we've had an induction for the price on the weekly where price has actually pushed for a long. Now, what I would like to see to commit to another short is I'm hoping that ADUSD can take one of these highs here, either the high of last week or even the week before that, all right, and give us somewhere where there's a huge amount of buy stop liquidity above these highs. If I said sell stop before, I meant buy stop liquidity. And then from there, give us an opportunity for a continuation short that will be heavy. That's what I'm really looking for. And I do think that ADUSD is aiming to do something like that. And of course, we have this massive reversal within this demand zone. And we have these highs here, which are good positions where price can even push towards. In fact, if the market does allow for it, especially if the dollar index does do this reversal that I'm talking about, goes to optimal trade entry on the bearish side of things and goes down to that order block back down to 102, that push back down to 102 could push ADUSD to even come back to the best area or the highest probability of selling, which will be within this supply order block and then for a sell. Now, I'm not going to go through the nitty-gritties on the lower time frames. I'm keeping to higher time frames so I can frame you guys or give you a frame of reference to work with of what we're looking for, okay, for each of these. So for me, these are the two kind of scenarios here. Scenario one would be price taking these highs and giving us some sort of induction around this area. Even just above this high is good enough because there is supply order blocks laid up on the side here to the left, even past this one. Or if we get a really good opportunity, price may give us a very strong spring up here. And from that, we could come back to the initial order block of this move. And that would be a very good short that would last for a long time, right? So this is the kind of idea that I have when it comes to AUD/USD, all right? Let's move on to the next one. So Euro/USD. Now, again, because of the fundamental aspects of the dollar, without having to look at this, you should be bearish on Euro/USD, okay, for at least midterm, 6 months at least. All right, now structurally speaking, we have two sides of this, and I'm going to take this from another angle. I'm going to actually put the bullish side of this market for us to observe a few things. Well, if I go from here, and sometimes trading view is helpful as well to go through this, you can see that the price has actually gone over to the optimal trade entry or above it. We've gone to 78.9 and we've gone to 86. Now, what I would do, and this is where I would use trading view. I wanted to do this demonstration here for you guys to see the bigger picture. Now, I expect AUD/USD to be bearish for the short term at least. Okay, short to midterm into the long term, right? So far, we've had a few things happen, which is that AUD/USD, and I'm going to put this here, it's still in discount pricing, so it's optimal for buying. However, I still believe that there is a short left to go on AUD/USD, and when I pull up trading view, you will see why before a massive long. But looking at this, I do think that Euro/USD could spring up to recover from the dollar strength a lot sooner than other currency pairs. All right, but at the moment where we're operating in, and this is the key that I want to kind of go over to. So we have a supply zone over here, this order block, right? From this supply zone here, price is broken above, return to the other side. As a return to the other side, we have this demand order block, which is where our focus is. Okay, now on the monthly here, we have no induction of the low, but the price is getting towards or very near to the low of last month. Now, what could easily happen here, I'll frame a few things here from the monthly already, is that we could have the price producing a reaction beneath the low and induction, and which could produce us back for another long here. Now, to the left, the liquidity that Euro/USD is working with is pretty interesting to see. Now, if I do this immediately, you'll see where price is operating from. This is the demand candle, okay? Now, ignoring the actual March candle because the body is a lot smaller than the wicks. If we start from April 2022, we had demand liquidity here. Price gave us a long. We had this reaction here, all right? Still in this lower high structure here. Price came back into this supply zone and went for a short. Now, when it broke past this area over here, price returned to the other side. Now, the key thing is that with flip zones, the reason why they work is because of principles about mitigation. What do I mean? Well, if you're in a buy position here, all right, okay, let's say you even were in a sell position and you have a big fund and you're holding on for 5 years or 1 year or 2 years. If you're in a sell position here, you got in at the wrong time. When the price comes back over here and returns, you'll be at break even at this point, right? You'll be at break even at this point. So then what will happen is that when you see the price breaking beneath, then what would you do? You continue to sell, right? Get back in, you broken even, come back in. So that pattern over here, and I'm making this very vague. We can go into specific detail more in the future. I'm trying to keep away from teaching. The price will return back to the other side here, and then you get these kind of sell situations, which is why when the price got to the other side, seemingly out of the middle of nowhere, we have this sell activity going on because of the mitigation situation, right? All right. Same thing if you're a buyer over here. When the price drops beneath here, you put a buy because this is a demand zone and the price goes in the wrong direction, completely breaks down, and you keep on holding. And then as time goes on, you return back here and finally you get back to break even. Then what you're going to do, close your positions, and then price, of course, at that point would sell off. All right. So this is what a flip zone is about from a money perspective. So my thing is that I would like to see how the price behaves at the low of last month. If we get a reaction here, that would be a great long to return to an order block to continue going short. For me, because the price has come to the other side of the flip zone, the market is letting us know that we are bearish. If you wanted to, you could actually look at this trend here and see where we are, and you'll see that the price is actually at equilibrium. The price is dancing around this equilibrium level. So we went above equilibrium, so into discount pricing, and then prices drop beneath here. So a return back here, triggered by the price taking the low, would be an exact reaction on the equilibrium level. And from that, after price has, broken past equilibrium, which is fair market value, all right, we can see the price continuing going short and set targets as simply as beneath this low. All right. Now with TradingView, you get to see a little bit more detail of Euro USD simply because if you're using MetaTrader, as you should know by now, you only get about 20 years worth of price action. So you can't actually see the full picture. But if you use TradingView, you can actually see a lot more. All right. Now, if you don't know how to use TradingView, this is not a tutorial for it, unfortunately, because I'm trying to save on time, but there's plenty of videos you can find out on how to use TradingView, all right? And I believe that if you actually just go in there and play around with it for a few minutes, you should be good to go, right? So I'm going to do this here. I'm going to go to the 12 month. Now, it still has my markings of Euro USD mapped out here. So I'm going to just do something here, and I'm going to pull this out of the back. So let me see if I can clear all my... I'm hoping I can remove everything. Let me just try and remove everything. Let me share the screen as well. Actually, I'm already sharing. Okay. I thought I wasn't. All right. So I'm going to remove all of this here already so that we can look at Euro USD from this point of view. All right. So if we're looking at the price action from here now, I guess you can see a little bit more in detail why I'm bullish on Euro USD for the longer term. Okay. But we're bearish for now. So if I delete all of these things, because it's, of course, in the way of seeing the structure of what price is doing. All right, move all of that. Now, I'm sure there is a way to remove everything at one go, but I actually don't even know what that is. So I'm just doing it like I know how. All right. You don't have to be an expert at TradingView to view the charts. Trust me, you should be okay. Just try and remove as much as I can here. All right. So, yeah, I think this will do for now. If any more comes into the way, then I'll get rid of it. I'm just going to remove as much as I can. One thing about TradingView is that it really allows you to see where you've got stuff on the chart so you can remove it all. I guess I'll learn how to clear everything. All right, here we go. Clean chart now. So this is a 12-month chart, which means that each candle represents 1 year, okay? From the open of New Year's, the day after New Year's, or just New Year's Day until the next year. So if you look at the price action here, and this is back from 1972, there's a clear bullish trend that we can see that price is operating in. Now, there are a few things about Euro USD, which is why I would say I expect there to be a short-term bearish movement. The obvious two are going to be number one here and here, right? Now, here and here, why am I saying this? Well, first of all, even though the trend is bullish, we have a lot of moments in this price action where we have massive ranges away or gaps between a return to an order block, all right, over here, a return to an order block here, and the next wave of a major bullish trend. So first one would be here with Euro USD, where price pushes up for a brilliant long. We get the return towards 1999, 2000s, but then price doesn't return anywhere near this order block, but it still manages to produce bullish liquidity, which already is an issue because that's unfulfilled efficiency. Price needs an order block to be able to move supply and demand around in the market in that sense. Okay. Second moment is this one right here, which this is the low of, this is 2022. It did look like lockdown for a minute. That's the lockdown candles right here for the year. If we go and look at this, you can see again, this second order block price has not reached it. So in terms of my target, which is why I was looking for this first target down over here, it should make more sense why I'm expecting the first target at least to be around this 94, 96 level here, because this order block needs to be filled out. And I do think that when the price does that, there should be some sort of reaction within this area. But I don't think the price is done. You know, in situations where there's a major macroeconomic situation, you know, institutional money can take advantage of it to kind of fill out old important order blocks or levels of price that it was supposed to go to but never reached to. Okay, maybe the liquidity wasn't there or just there was no intention to do so. So these are where I say that this could be purposeful or not purposeful, but nonetheless, the price has done it. So with the second one, let's take a look. if we go down here, this would be my kind of second target. Now, not exactly at the order block yet. Why? Because beneath this low, there'll be many a mixture of sell stops and stop losses beneath this low right here. So beneath here, all right, I'll be looking for a second target where the price may react for a while. And so when I search it out like this is why my frame of reference for how long is like a short to mid-term is about, I would say 6 months to 18 months, okay, for this to happen. Now, I'm sure there's going to be moves and news in the market that can speed in this process up. But, you know, if I look over these years over here, we did have some moments where there was massive activity going on. But I do expect this to happen here. So for me, I expect the price of Euro USD to get to, when the US dollar gets to its highest strength, to get really back down to this 1.071 level. Okay, this is the long-term kind of view out of my midterm analysis, okay, if that makes sense. So out of the midterm, which is 6 to 18 months, I think at the 18th month mark, we should be here, which is about next year. All right. Now, if I put Fibonacci, institutional Fibonacci on, then you'll see that these price action movements that are happening, okay, would make a lot of sense. So if we look at this market from peak to trough, if we're going to put it that way, in terms of a range here, from peak to trough right here, the market is dancing around from this perspective just beneath the equilibrium point. Now, I know the color is a bit weird. I hope I can just change this for you guys to something a little bit darker so it's clear. Okay, that's even worse. Is there any other color I could use? All right, I'll use this orange. I think that could work. If it doesn't, then we'll try and go a bit more. Nah, has to be brighter. No problem. Let's just go for something here. So, because the candles are green, I'll just choose blue. I'll get used to the colors. All right, here we go. So we've got like a grayish blue. All right, so if we look over here, the 50% level, which is equilibrium, or the point at which price is at fair market value, we've closed beneath there. So last month, or last year, excuse me, I'm thinking about months. This is 12 months. Last year, the price closed. We had a strong move, to try and get back to this order block. Price really pushed down pretty hard during last year, which was primarily because of the Ukraine-Russia war situation. But we had this strong push here. But one thing the price did achieve for the year, which is important, is that we did close beneath equilibrium. So right now, the market is operating at, I would say, the most expensive or premium discount, which means we're just below 50%. So it's still premium, it's still discount, but it's the premium of the discount. When we start going towards the 62s and the 75 especially and below, then we're looking at deep discount. So if large money, people who look at the market over 30 and 50-year spans, governments and etc., for bonds and whatever, if they're looking at this market from a pricing perspective only, no technical analysis, just looking at premium and discount pricing optimal ranges, what would be the intention of institutional money? Well, in this case with Euro USD, the intention would be to push the price down into as deep a discount it can. And there's obviously confluence for that. Number one, we have a very big order block, a very important one from 1984 that price didn't return to at any point in history, or hasn't returned to at any point in history yet, to derive liquidity here for a buy, right? That's the first thing. So as a result of that, we have that. Second thing is that price point or that range is at the deepest area of discount in terms of Fibonacci percentages, which is 86. Now, 86 is not an official Fibonacci number in the Fibonacci sequence, but it is a mathematical kind of deeper pullback point from the 75 and 78.9 levels. Okay. So this puts it in a situation where history is set up, or history is going to be set up. All right. I guess no pun intended there, but history is going to be set up in such a way where something is going to happen to the euro, which I do see happening, which is going to push the euro to extremely low prices. All right. Which would put this right into this order block. And at that moment, smart money, which will be waiting for this moment in history, will be buying up the euro like crazy at this point. Okay. So having that in mind is important for you to understand, which direction we're looking at when it comes to price action. Okay. So now that you know this and you've see the price action here, I'm really definitely bearish on Euro USD from this point where we are 107 down to the 71.70 area. So right now, any pullbacks for a long that Euro USD will do in this year candle really is just for the price to have a trigger to continue going short, especially once the price breaks beneath this demand zone. And what I would say is that I consider this demand zone over here as the equilibrium price block. So the order block is maintaining the price from really breaking into discount pricing is here. So how do I expect the price to finish the year? Well, at least I'd like to see 2023, if it can't do anything more than this, at least close beneath this order block here. Because once the price closes beneath this order block, there isn't any single one until the 94 region that can hold the price around that equilibrium range. So 2023 is a key year for the price to do what we need it to do. Okay, so that with that being said, let's switch over now to Hugo's way. So I hope from that small demonstration, you understand why using TradingView mixed with MetaTrader is important. Okay, so what would I be looking for? Now, opposed to other pairs, Euro USD has kind of induced the previous week's low into a demand area here. And what I'll do for the moment to isolate this weekly range into a smaller area, the weekly range can be caged into this demand zone over here. All right, so if we took a range, and I'm just going to delete this just for a moment, all right, for you to understand what I'm doing here. If we took this range from here to here, all right, and I'm going to zoom out a little bit more and zoom out here. Okay, so go over to the weekly here. You see that at the moment, where the price is wicked down to, taking away this line too, the price is actually wicked into this optimal trade entry within demand. So Euro USD actually should be producing some sort of long. At the moment, though, I do think it still has one more short side move to go, which it falls in line with the price maybe taking the low of the previous month before going for a long. Reason being is that in this range right here, we have a liquidity gap that hasn't been filled out. So it'll be pretty cool for the price to take the low here, right? Run the low over here, and then give us some sort of pullback somewhere within this range before we have a short. Now, in terms of somewhere within this range, what would we do? Same thing. If I grab the fib, I take the swing high, which is better because these two highs are very close together, even too close, which might actually be a problem. You might actually get the price going above it. I'll look for an OTE at minimum pullback, okay? And in that case, there's an order block here already. Slight gap from the closing price of the bullish candle to the open of the next. And from that should be around a good range as a first target to say will come out. Price may even shoot above it and give us this last kind of like fan out of price. The only thing is because of the D1 and what we discussed last time about the unfulfilled efficiency of this order block here, which doesn't matter, I'm more a proponent of the fact that price will probably return here and then continue, right? So this is my idea. And then as I map this out, it will make more sense why price is kind of pulling back down here, all right? So that's Euro USD. Let's go to the next one. So Pound USD. Pound USD, let's go over here. Same situation. We can take it from two sides. I think for this one, I would actually use TradingView as well. So I'll start on TradingView. We'll go to the monthly and then come down to the weekly here. All right. Pound USD. Let's put this properly. I forgot you can't use the slash here. So I usually use the ICE price feed to look at things. All right. Now, if we look at Pound USD from this perspective, it gives us information from 1972, which is a bearish pound. Now, just to make sure, sometimes I look at another broker. So, for example, in my case, I like to use maybe Saxo. All right. Just to see how far I'll go back. And I do this to see which one gives me the furthest back price feed. So FXCM and ICE are given the furthest back price action. Now, I still have my markings here, which is an analysis that price was doing. Now, I think this is just the news here. But if you guys can remember the anatomy of any of the live sessions I've done when I looked at the anatomy of Pound USD, we had a situation here where last year, seemingly at random, which I don't believe was at random, the market took the lowest low in history, which is, well, at that time was 1.05, I believe, It was created in 1985. It's the lowest point that pound USD has ever been in its history. All right, since it's been, trading in the markets. We had this wick beneath here, but the body of the candle didn't close, which is not a surprise to me. And that induced some buying, right? Now, if you look at this market, again, we have order blocks to the other side of the market, which make me suspicious about the price. If we trace liquidity here using this 12-month chart, we have this area here, and then we have this order block here. Now, immediately I do this, there's a very big question mark above this order block here. Now, what does that mean? It means that we haven't had a major return into this supply order block. And since, again, around the same period of time I removed this, since I would say I'll just go from the first bullish candle from 1985 until now, we haven't had a return to this major area of supply. All right, so the pound has been operating in not the most optimal efficiency from this time frame that it could do in terms of supply liquidity, right? So currently it puts pound USD in a position where the price, we should be expecting some sort of long in the future on pound USD. But before that happens, we're going to need a very good trigger short for that to happen. I do expect that one day the pound will definitely have this moment in history, okay? When I think that's when the dollar will become weak, and also the pound may have some great external fundamentals. Now, having that in mind, and of course things can change. For example, if the body of, I don't know, the month of this candle closed beneath this 1985 low, then that will change the dynamic, all right? So from this perspective, this is where we are. Now, this time frame in this situation is useful because we know we need a long, but we also need to, because we're looking at US dollar based strength, we do need to have a look at what's going on over here too, to kind of gauge a picture of what's happening. So what I'm going to do, I think I can do two trading views like this, right? So I'm going to do this, paste this over here. Now, there's always going to be moments where when it comes to major currency pairs, they have their anomalies between it. So trading view is very smart to load up Euro USD for me, but I want pound USD, so I'm going to bring this back here. All right, but if we look at trading view again here, let's just go for the 1 month chart here and have a look at what's going on. So on a 1 month chart over here, okay, it becomes immediately smaller. We have a few things to consider. Obviously, the first thing is that this low down here, which is the low I'm talking about right here, is the lowest point in history before 2022's September movement, which caused the price to crash down even further. All right, now beneath these lows would be a very, probably the most amount possible, or the highest amount of terms of liquidity of sell stop orders, right? Okay. Now, old orders and old highs and lows still have liquidity above and beneath them, okay? Because when the price is defending the price from going any further, there'll be a buy that will take place, and there has to be counterparty risk that banks have to do by putting a sell stop to kind of cover their backs, right? In the sense of hedging, right? So now that the price is taking this low, we've bounced off of this order block. What should we be looking for? Well, if the price was to produce this long, which is the long that we looked at over here, on this larger time frame, let me just get that out of the way, where we need this long to come back here to the above twos. If pound USD is going to have to do that, then it needs to have the right liquidity to do so. Now, off the bat, and I can delete this here, because these were my other markings here. Let me just write this here. Off the bat with pound USD, the first thing that we've got to consider, and I'll just write this over here. The first thing we have to consider would be this order block here. Now, because I keep using the same color, I think it might get a little bit confusing. So let me change this to a kind of like a light red so that, well, that's the line. We need to fill it out. So red as well here. Yeah. So this is the main order block here. This order block is important because it's the key area of liquidity that took that low and made a new all-time low of 1.03. Yeah. Right. So this order block here, what do we need? Now, first things first, let's zoom in a little bit here. If I do, immediately you'll see the same issue that we've got going on. Pound USD has produced a long, but the attempts where the price is supposed to return, let me just drag this here. And I'm going to put this right over here. Over here, when the price was supposed to return, I'll just use this lowest point here. Anything above these lows should have returned here to produce and continue this long, but we haven't had that. All right. So where's pound USD operating in terms of a range? At the moment, the range is operating in, again, it's very similar to Euro USD with what I said about mitigation and all the blocks here. We have a demand zone here that's acting as a supply zone right here. All right. If I draw the full body and ignore the wicks, you'll see that what's going on here is that, and I'll use blue to represent that it is a supply zone at the moment. So let's just change this to blue, right? So if I change this to blue, change the line to blue as well. So over here, the price has entered into the flip zone on the other side, right? And we've had an induction up here, which has produced the initial short, which is the one that I was in, and maybe some of you guys have been into. Now, that being said, what do we need price to really do? Well, if the price is going to launch off for this more longer term long, then at least pound USD would need to crash down a good number of pips to get into at least this order block here. Now, it doesn't mean it will stay in here because it can easily go beneath that. The price even, if possible, could even take this low right here and do another induction beneath the low of last year. Because now this is the low of last year and also the low of the all-time low in history. All right, so we have a few scenarios here, but at least we need the price to pull here. Now, what can we do? Well, if I get the Fibonacci again and we can have a look at this. If I put the Fibonacci here and we take a look at where we are, when the price actually returns into this order block, compared to this trend, all we're really at that point, if the price came here, would be equilibrium. Now, the price can launch off from equilibrium, but if there's going to be major buys from a key area here, then we need some deeper pullbacks. We're going to need the market to be going into discount because logically speaking, they'll want to get the cheaper prices. So at least 62 and beneath, which lands us, and pay attention to this part, this lands us at the edge or the bottom half of this order block and the beginning of this major green order block here. So this puts into question that pound USD actually may even dip lower. If it wanted to go for that OTE, it would have to drop down here. All right. So this is why I expect pound USD to go for a short in this same structure. So what we should be looking for right now, and I can switch back to Hugo's way. What we should be looking for, and the area I'm talking about is here. So let's drag this over here. What we should be looking for using the MetaTrader charts would be some sort of short, which we already have an initiation of, to give us this movement here. On the weekly, we can even simplify this even more. If I take the high of this range right here to the bottom of this range right now, all right, and in this case, I'm going to have to go to the D1 for you to see it. Let's look at what the price is doing. Right now, yesterday's move pushed just above equilibrium at to the 62 level. Then the price today has given us a small induction. And now it would make sense to you why the price is kind of selling off. It had this accumulation and sell-off. Doesn't mean that this is the major sell-off, but we still have to look at the dollar index. But you can see that there is intention for there to be a sell. Okay, right? Now, the best, of course, entry would be, and this is scenario number 2, would be for price to come back to optimal trade entry at this order block. Now, I've used this whole area. In principle, it's the last 2 bullish candles before the price changes direction. So the order block is actually this small little range here. As soon as I do that, then you can see that there needs to be at least one more pullback, which is possible, especially if, and this is what I'm looking for, if pound USD stays within this supply flip zone here, and then afterwards maybe takes the low of Friday and gives us a trigger to continue going long, then we should be looking for a long back up here and then a short, right? And this is what I would expect pound USD to give us, this major move. Now, that is a lot of pips, compared to what we looked at on TradingView. We're looking at least, over 100, at least 1,500 pips of a short. So that's great opportunity for us. And this is why with pound USD, we should continue looking at what price is doing, okay? So this is the idea that I have for pound USD. Let's move on to the next one. Now, NZD/USD is the, I'll put this here, is the other kind of, I would say like a cousin to AUD/USD that I'm looking at. Now, with NZD/USD, we don't even have to actually go to TradingView. Okay, I'll leave you to do this as homework for yourself, because I've gone through this one before. So this one is actually pretty quick and easy to go for. And what is that? Now, if I go over here to this demand zone over here, opposite to what we had with AUD USD, which if I go over here to AUD USD right here and pull that up, AUD USD actually, with the 2020 situation, actually returned to the order block and actually did go beneath the low of 2008 and 9, right? However, with NZD USD, and I'll pull this here, this is the low of 2009. The price didn't return beneath this low. Okay, so we have a major 14-year unfulfilled deficiency since when 2023. That price hasn't returned back beneath here. So immediately with NZD USD, we should be looking for a short that should return to this order block, which is the sub 50 level, around about 48 before we go for a long. So that means one thing, that any pullback that we see on NZD USD should be a conduit for us to look for another short entry or multiple short entries to ride this wave down. Okay, and all the price has really done this week is just given us a pullback. So if we go on the weekly here, you see we have this kind of weekly structure here where price has given us an induction almost in the middle of nowhere. We go down to the D1 and we look at this in more detail. You see that price really was just looking for a pullback. Now, the New Zealand dollar is considerably weaker than the Australian dollar at the moment. And the reason why there's even a way to find that out is because there is actually an AUD NZD pair. Okay, so there's Australian dollar versus a New Zealand dollar pair. And I like to use it sometimes to gauge what pair I should trade. So, for example, if I can just get AUD NZD for you quickly, it's somewhere here on the left. AUD, okay, here we go. So AUD NZD is right here. So when I use AUD NZD, I use it for trade picking. I used to trade it by itself in my early days, but AUD NZD is a very good pair if you want to ascertain to which pair you want to trade on, or what pair out of AUD USD or NZD USD do you want to trade on. Why? Because it shows you the relative strengths between the two pairs. And if you notice, all right, even with today, for example, if I pull up AUD USD, we look on the H1, this is really for AUD USD. This is the pullback phase that we've had since the NFP news. It's 35 pips, yeah? If I go to NZD USD and we look at the same situation, NZD USD is pulled back by 46.3 pips. So clearly there's a lot more weakness on the New Zealand dollar versus the US dollar compared to Australian dollar versus US dollar. They're both paired against the US dollar, so they're both base currencies and the US dollar is the core. But the New Zealand dollar clearly has more pips on the downside or against it, which means that the New Zealand dollar is weaker. Now, how can we compare that with the AUD NZD chart? If we look at the AUD NZD chart, it's kind of like a little dollar index kind of correlation thing for me personally. It doesn't mean it is that, it's just how I see it. If you look at the Australian dollar versus the New Zealand dollar, you can see that the Australian dollar, remember, this is the base, so we're looking at one Australian dollar. How many New Zealand dollars can we get? At the moment, one Australian dollar gets you 1.09 New Zealand dollars, which means and because we're bullish, it means that for that same one Australian dollar, you can get more and more New Zealand dollars, which means the New Zealand dollar is weaker than the Australian dollar. Now, what all of this dollar stuff that I said, what does that equal to? Well, if I see this, then in terms of picking which pair I will trade, I'd rather trade the New Zealand dollar versus the US dollar compared to the Australian dollar versus the US dollar, because I'll get more resistance against, or less resistance, I'll say, against selling on the New Zealand dollar because it's weaker than the Australian dollar. So you can use this as a way to pick out pairs. There will be moments in history when the New Zealand dollar is stronger than the Australian dollar, so that at that point, if you're picking between trading AUD USD or NZD USD, you pick AUD USD, right? So this is how it works when it comes to using that pair. So now that we come off of that side road, what am I looking for with NZD USD? Well, first things first, because it's broken beneath this kind of, now, because there's already a body close here, it's a little bit difficult to use it. I'm going to have to go from this over here, all right? I still think there's upside potential, and there is actually a liquidity gap on NZD USD right here. For me, I would like to see some sort of pullback. On the weekly, I would say if I took a weekly range, or I use the H4 in this case to do it, if I just kind of took the last H4 range that we've got going on from top to bottom, we're nowhere near equilibrium at least, which means that we're still in premium pricing for selling. So that means that price has room to push up for a long, and we should be seeing some more bullish action coming in the days to come. Of course, because we have liquidity gaps that were left behind yesterday and quite a few kind of crazy moves, especially here, the price will need to fill that out. If it leaves it alone and continues going long, I'll be looking for a reversal signature. Now, this all hinges on one big thing that we've been just talking about, and I kind of want to bring it to mind because I've been going through all of these pairs, and it's this situation here. If the dollar index does come to this optimal trade entry and starts to sell off, and it, for example, breaks beneath here, by then it'll be too late. By then you know it's bearish. But if it actually doesn't close above this high and is not able to, and it makes a lower high, we should be going back down to 102 to this order block area here before we get the next set of reversal. So that's what it hinges on. Okay, with NZD USD. All right. So let's go to the next one. So next one, we're going to go for, now we're going for the base pairs of the dollar. So I'm going to start off with USD CHF. Now, that was an accident, me moving USD CHF and USD CAD around. I didn't do that. Now, with this one, it's pretty simple because we're already in the long. You guys should be in at the bottom right over here. I gave you guys entries at the 88 level. My entry is 88,316 or 317, something like that. Right now, with USD CHF, one of the things we can say is we can look at what we have on the weekly here. I don't need to do a massive scale analysis on this because you should all be in and you should be pretty clear what's going on. Now, this week here is really teetering above the high of last week or the close of this candle. Wherever the close is going to end off here would mean something. Now, I am hoping that the weekly close is with the body of the candle and we do have a close above the high, because the reversal won't be so strong on USD CHF. And to be fair, it's been holding up pretty well with all the price action reversals on the dollar that we've seen. So off the bat, when it gets to 10 o'clock for me, UK time, or just the end of the market or close for Friday or close out for this week, the first thing that we should be looking for is if there's a body close or a wick close. If there's a wick close above this high, then we may get a deeper reversal in USD CHF. If we get a body close, then the reversal wouldn't be that strong. All right. So for now, if we go from at least looking at this last range right over here, you can see where price wicked to, which if you were on Insta, you saw my targets. I think I made altogether 3,600 on all the trades that I took. Now with that movement there, I took my profit target around about equilibrium. Now you can see price has hit at equilibrium and kind of been pushed back from that area. So from this bearish trend anyway, even if the price wanted to continue selling, we're still in premium pricing for selling. So there should be definitely room to go for a long. So any pullback USD CHF will do off the bat, you should know that it's a short-term pullback. All right, looking at the D1 structure here, we haven't actually had any inductions that can produce a short, but we have had a very strong one that can produce a long over here. Now, this is not the only one that can produce it, but Friday's done pretty well for USD CHF, and we still are closed above this key supply zone. So USD CHF, looking at things, may actually have a bit of a smoother journey or smoother ride when the dollar's kind of going back and forth. And I would say for now, with USD CHF, where the price has dropped to right here into this demand zone, is actually pretty primed now. I know compared to every other pair, it's pretty primed to continue going long for a bit. All right. The only things I would say I'll look for or I'll map out is just the highs and lows of last week, because we could also, especially if the dollar index does do this pullback, get the price able to go for these lows and of course, maybe some of the lows across here, right? At least, and then going towards the next order block. So on that note, even though USD CHF looks fine and dandy, I would watch out for here, and I'd also even watch out for over here, because we have a bull trap over here created. We have the order block that produced it, the supply zone that pushed the price away from it. If the price comes back into here, at the same time the dollar index goes into that OTE level, then we could actually have a similar short. Remember, the dollar indexes and the USD CHF are highly similar in their structure. And if that happens, then we could get the low of the week taken and price can just proceed to go to the next available demand area, which would be here. All right. So it could work out to be a good pullback short before another long, right? Now, next one is USD CAD. USD CAD off the bat would always be crazy, especially on a Friday, the first Friday of every month, because the Canadian dollar has its unemployment rate news at the same time that the NFP happens. So the movements are more violent and crazy. Now, there's obviously clearly going to be some sort of long, which is good news. It means that we have an opportunity to grab a banging long, guys, very soon. But in the meantime, if we're looking at the price action of USD CAD, it almost looks like it's at a standstill. Now, the idea for USD CAD is that we should be looking for a short. I don't think I need trading view for this, because if I just take the range from top to bottom and I just draw out this supply zone at the upper point here, this supply area here. All right, the two attempts we've had to reach this supply zone, one in 2020, one in 2015, 2016 times. Price hasn't returned here yet. And we have an 86 level and a supply order block that hasn't been filled. So off the bat, we are definitely going for a long. And at the moment, price is really balancing above this this flip zone here that's been flipped, okay? Right? This is where we're I would say, operating at the moment for now. Now, for me, with USD CAD has always been the anomaly out of the pairs, okay, because of just the way that the Canadian dollar economy and Canada is set up as an economy and their relationship between each other, US and Canada, and Canada's relationship between oil and the economy and etc. Now, we have many lows here that all have sell stop liquidity beneath them. And the question is, what would the price want to do? Now, if I took this movement here, and I've been watching it for a while, sometimes I get suspicious that will USD CAD kind of break the mode, which is already doing, and come back to this order block? That's one question. And if that happened, that would be a major short that could run several sell stops beneath here, return here, and then give us a move. All right, that's one option that the price can do. The key thing, though, if I took this range right here that we're looking at, is that the price has closed beneath equilibrium on this point. And so we are getting into discount pricing. So that being said, the price doesn't actually have to get to this order block now. It will do in one day in the future, for sure. It doesn't have to be now. You know, for more shorter term targets here as a scenario, it could be as simple as we have these two lows, these two weekly lows that are close together. These two lows, which are not too far away. This low is pretty far from the rest, so it may remain untouched. But we could just have another leg of shorting on USD CAD that could take these lows, and then that is enough liquidity also to kind of give us the run to continue going long. You know, we have liquidity gaps here on USD CAD that need to be filled. So really, it's going to be a matter of looking at price action and working out, you know, what fits best and how the price reacts at these lows as well. That's also a key. So I can say off the bat that would be the case. Now, because of the relationship that Canada has with oil, if USD CAD is going short, a lot of the time, not all the time, we'll see at least WTI or XTI oil going long and vice versa. Now, I'm expecting a major short to come in with oil anyway, but you know, that being said, it was not bad for us to have a look at oil itself and just have a quick correlation there. So if I do this and let's look at the structure of price, oil has definitely closed beneath the low of last year with the body of the candle. So it's definitely a short. At this point here is where I was looking for an entry. We even had a liquidity gap that the market didn't fill for about 2 weeks and then crashed down here. Right now, gold is facing a bit of I don't like to use the word resistance because I don't trade support and resistance, but just there is resilience from buyers to hold the price around this 71 area. All right. We have demand zones all across here that the price is working with. I think because the price is so close to the low of this range, I'll take it one step down. And if you want to, you can even kind of keep it at the last demand zone. Now, why do I always look at the last demand zone? I always like to look at the last kind of wave of deterrent against selling or resistance against selling when it comes to price action. And the lowest on the weekly anyway, from this short range here, compared to the broad picture of what we're looking at here, the lowest resistance toward, or the last point where price could break beneath is the $60 level, which is like a psychological level. I do expect the price to get here. If it breaks beneath here, I mean, for those of you who know the trading that I did 2020 when I took gold long and short until the price crashed, literally, and I couldn't actually close my positions because the broker had to pause trading for a moment. But even in those periods of times anyway, we had some gaps that were left behind that of unfulfilled efficiency in price. And I do think that that's not left on purpose. I think that's literally liquidity issues, possibly. All right. So I do expect there to be a very big shortcoming along. Now, in the more nearer term of things, what has gold done? Excuse me, oil. I guess I'm thinking about commodities. That's why I said gold. But we have this demand zone that price has been bouncing in for quite a while. And if I go from the last major range that we have, I'm going to take it from here, right? From this large top to bottom range that we have over here, let's skip over to the H4. You'll see that we've had in a couple of attempts. You can see there's been an accumulation around the equilibrium level. So the price has been dipping into discount, but then coming back out of it. And now we have this kind of bullish move where price seems to be trying to approach that. And if that is the case, and price is able to get past, then I am looking for some at least some discount levels. I wouldn't say equilibrium. We have equal highs here. So definitely we should get above 62. Now, again, in this case, it just works out so perfectly that we do have two order blocks. We have one order block here, which is at the OT and 78.9 level. But then we have another order block here, which I'm suspicious of the price to go to, because this supply zone here, where price derives supply liquidity, this supply order block didn't return to this one. So in terms of tracing liquidity, the mold is broken when we get here, which means that oil should really actually probably push up to about 80. And if that happens, that would mean a very good short for USD CAD at the same time, if they do have that opposite pair correlation. If that happens, should be looking for something around here and then a major short from that, right? So you see why it's good to look at these two, because immediately looking at this without having a bias, there is a kind of a nice inverse relationship going on between the pairs. All right, so that's USD CAD. Now the final one is USD JPY, which I don't trade much, but for those of you who are the UJ traders out there, I want to make sure that you guys have the opportunity to also grab chances to look at price. Now, what I'm going to do for this one, I'm going to use TradingView as well. So I'm going to go over here, USD JPY, right here. If I go to USD JPY, I'm going to pull up ICE. Let's go for that 12-month range quickly and just have a look. Now you can see I do have markings here, and funny enough, I had the unfulfilled efficiency marked out here, and you can see how the price is wicked above it brilliantly. All right. That's amazing to see. I'm so glad that TradingView saves your analysis, because it can really help you to see, how great your analysis was. Now, because that's already been filled, that unfulfilled efficiency has been filled out into our order block, we don't need all of these markings anymore. So I'm just going to quickly remove this for a second. All right. Once I do that, then remove all of that. Remove. All right, remove. And then remove. And then remove. All right. So I think USD JPY is, from the 12-month view, is a very straightforward chart. There's a very clear bearish trend, but there's massive unfulfilled efficiency. I mean, crazy ones. All right. So for this final one, we'll do it in two parts. So we have this order block here now. Because the wick is greater than the body, in this case, I'll use both candles here to represent supply. All right. Now, as immediately I do that, you can see what's gone wrong here, right? Over here, price didn't return to supply before it went for a short, okay? That's one point right here. Okay, so that's one supply zone. The next major supply zone here, where we had this massive noticeable short, which is where I'll draw to start the range from for the Fibonacci. This order block here, there's been no return since 90, and you can see it all happens at the same time. Now, around 1985, there was another financial market crash. And it seems that during those times, the price is just planted in areas where it sets itself up for some major returns or major pullbacks to happen. It's kind of like history sets itself up, or the people who are writing history artificially are creating scenarios that they're going to come back to. So one obvious thing already, even if I didn't draw a line, is that just using the crosshair here, price will definitely need to get back to above the 200 levels on the Japanese yen. So 229, which is good news for us, because that means we can get some crazy trades going, right? We also have a liquidity gap over here that price is gapped down slightly. The close of this candle and the open of the next, there is a gap here. all right? And it has to be filled with the body, it needs to be filled with the true liquidity of the market. So nothing, no question about it. And also, this is actually a liquidity void. When you see price pulling away from an area so massively, you know, a lot of the time, most of the time, in fact, all of the time, the price will skip levels in between this drop here, that the price will arrive back to fill at some point. And so we definitely will be going above 200. That's a fact. Okay. Now, the final order block I want us to look at is this one here that has been holding price since, and I quote, the 1990s. So before I was even born. All right. So before I was even born, USD JPY was staying in the same area. And now I've been born, the price is still in this area. So let's see what history we can get out of this. So price has given us this supply zone, which is also a price cap. We can see that we've had the push down short. We had the smaller push down short. And when you look at it from this angle, it shows you how insignificant, for some pairs anyway, lockdown was, or 2020 prices was. It didn't really do much to the price. Now, in this last 3 years span from 2021 till now, we've seen a major influx of strength on the US dollar versus the Japanese yen. Now, the key thing that we need to be looking out for, and you should be looking out for now, remember, when it comes to pair correlation, certain foreign currencies have a stronger affinity to the dollar index than others. In my personal opinion, USD JPY's affinity to correlation in general is not really that strong, and it's because of the Japanese yen. Japan, I'm sure you've heard me say this before. If you haven't, it's your first time listening to me, no problem. But Japan's economy is 70% of their GDP comes from their exports, because it's a primarily exporting country. And one of the key kind of rules, if you have fiat currency in an exporting country, is that you want to keep it as weak as possible to keep it favorable for exchange rate. All right. So for the global partners, the global, you know, demand for your products, the lower your exchange rate is, the more conducive, the more people would want to buy from your economy, which is one of the reasons why the Chinese yen is artificially weakened, a lot weaker than its actual economic strength of, or the economic strength of China. All right. Because it will become too unfavorable for people to want to purchase goods and services from their economy. All right. So with that business model, if you want to put it that way, for the economy, a lot of the Japanese yen pairs, including USD JPY, you'll find these kind of currencies where they just have strong springs of very, very bearish moments in price, very, very bullish points in price. And that's how it gets when it comes to, you know, these currencies. But off the bat here with this supply zone, what we're looking for, we need in this year, we've had an attempt last year, price wasn't able to, but in this year of 2023, the first thing we need to make sure that USD JPY needs to do is it needs to close above this area. And then now, as we're going to cage this down, what we want to look at is where there can be buy opportunities or pullback opportunities, which will be a sell, for us to launch ourselves into this movement before it breaks. Because I do believe as the dollar is gaining strength in correlation, we should see a massive influx of strength coming to the US dollar versus the Japanese yen. Why? Fundamentally speaking, Japan will have to artificially weaken their currency very strongly to keep up with the strength of the dollar, to keep things favorable, which is why it can go from, you know, 139 yen to 225, 35 yen and not really be a problem, because they have to keep things as linear as possible, as balanced as possible. So this is the major area that price is holding. And the moment we break past this, and this will be at the end of the year, we know 2024, we know that we're going to have a very good movement here. Now, of course, you're going to say, well, like, this is a 12-month chart for one candle. Each candle is 1 year. This is where we're going to cage the price to look deeper into what's going on. Now, what I'm going to do, I'm going to keep this chart here. I'm going to go to the 1 month chart, and let's take a look here. Now, this 1 month chart, all right, we can actually take a look at what price is doing without having to go any further. Now, on the monthly chart, we had this break outside of this area, and we had this return, right? And this looks very similar to the dollar indexes push up and then seemingly out of nowhere a return. When it done this, it left this order block. And I always say I had a buy trade at the bottom of this wick here. As soon as it hit January and I saw this, I took the buy, and I should have never closed. I should have just left it running up till now, because it's a historical trade. So already I can say this off the bat that the market is already given the entry to break out of this range. Okay, when the price broke out of here and returned here, it actually gave us the perfect entry. So with USD JPY, the focus should be on how we can capitalize on this move. All right, so I'm going to go back. Let's go and look at this now that you have the information you have. This is the order block that we're looking at here. What can we do? So for those of you who are USD JPY traders, there's a few things. Right now, the price has come to this final supply zone area here. And last week, we actually closed above it with the body of the candle. Now that price has broken above it and returned, what is this called? Supply zone. When the price breaks above it, it becomes a supply flip zone. So this area now becomes an area of operation for demand liquidity. Now, of course, we can't trade this on the weekly. And the thing that we can do, though, is use the weekly range to kind of ascertain to where equilibrium is. And lo and behold, what do we have? This supply zone is actually an equilibrium order block. It's been strategically placed here at the equilibrium or midpoint of this range because why? When the price breaks above here, as soon as the price moves away from equilibrium, we've gone from discount prices for buying into premium pricing. And at this point, the market would want to definitely run up and continue going, entice premium buyers into the market whilst they're in at a discount and really start to let this price rally. So on the D1, what can we do? Well, because USD JPY is fundamentally different from most of the pairs, the USD JPY is in its own class, just like USD CAD. Excuse me. We've entered into this order block. All we really need to get price going in our favor would be to get some sort of engineering of price, some sort of situation where the price can give us a pullback and then a long. Now we have a lot of highs here, which above these highs, you should know by now, would have buy stop liquidity. We'll also have sell stops here. So what we want to observe is, and I'm going to put the low of last week here, is just to see what price could give us. One option is that if the dollar index does do this move and it does push and have an effect on USD JPY, we could end up with a situation where maybe the price will take these highs first, because right now this is the highest high for the week. It could come for all of these highs right here and run the sell stop liquidity above the highs and give us a short one more time and then give us the long. Or we could be in a situation where we might just have a simple pullback, even on a daily chart, and then we can go from here. Now notice what we have here in the price delivery mechanism. For those of you over here, what is this? This is a range of accumulation. So the price has given us an accumulation range, and out of that, a new trend has been birthed. And this is why USD JPY is pushing up the way it is. So for me, with USD JPY, I don't trust it to give as much of a pullback as the rest, but if it does, it will be great. If not, what we want to be looking for is the highs. And the absolute key thing to do is to make sure that we do get in at discount prices. Okay. So now that you have this structure in mind, I'm sure that there's a lot to take in, but I'm sure you've learned a lot. The final thing for us to do, as always, is to check the news. So to finish this off, let's take a look at the news, and then we'll go from here. So if I go over here to FX Street right now, let's take a look at the news over here. The final thing for us to do would be to take a look at the news that's going on from here. So coming into next week, all right, I usually do like a 2-week scale. This week I'll do this month, all right, and let's just take a look at what's going on. So if I go over to the next one here, all right, so next week, we just want to see where the landmines will be. So we do have US news next week. We have the PMI news on the 5th. We have interest rate decision for the Royal Bank of Australia. Okay, we have a lot of Australian dollar news, which would be perfect for us to get that situation where price can give us maybe one more pullback on the Australian dollar. All right, the next thing we have is CAD news for next week. I think I'll keep it to just this week outlook. We have European news, all right, employment change news. And Friday, we end off with Canadian. I think this news for next week I would say that it's not so US dollar dominated, but it puts us in a position where we could actually get some pretty good movement for next week, guys. All right. So I hope you guys enjoyed. Don't forget to like, subscribe, and share with your friends. And I'll catch you guys later on. Until the next one, take care.